Okay, guys, I'm going to show you guys how to do price action, but when we're in a trend, in a trending market, downtrend, uptrend. So we're going to set up for USD JPY. We're going to do a put. Don't forget it. And what we're looking for is we're looking right here, you see. So we're going to go in right now for put for 2 minutes. And we're basing this play off of right here. As you see, we have our price action line. I actually can come up a little higher, start from right here. And you see all the way right about here. As you see for price, so even price touching right there, this is what we're looking for. This is what we're looking at. So this is what we're playing off of. Still not worried. If it goes higher, I'm just gonna go in for martingale, which is basically I'm gonna double up and then take it again because this is highly overbought. So I'm gonna set up for it again just in case. And then just was waiting, I'll wait for the next candle. Either retracement, there it goes. So now I'm in. Now what we're looking at here is price. As you can see, this is the highest it's been. We go back, you know, every time the price came and touched resistance, it came down, as you see. So now what we're doing is it's the first time it came higher than that. So what we waited for was a retracement candle, and then once we seen a retracement candle, we went in. So let's see where we're at. The other one was the one that lost. This is the one we're in right now. We should see a significant push soon where it'll dramatically drop. There it goes right there. Should be dropping further. And even though you guys see my indicators right here, I'm not using those right now. I'm strictly using support and resistance. These are support and resistance lines right here. This right here is considered support. This is considered resistance. Every time it touches support, you see it goes up. Every time it touches resistance, it comes down. There it goes, the dramatic drop that we was looking for. So yeah, we lost the first one, but then we doubled up on that second one and we was deep in the money. We actually probably can go in again, to be honest with you guys, for this. Because again, we should have been down the money even on that last trade. So what it was a fake out. You know, market makers was getting their money. They know a lot of people was gonna go down and take a put, and then they got their money on that. So what we did is, knowing this, we just doubled up on the next trade, went in on it, then panicked, and as you see, we're deep in the money. And here we go for the second one. We're about to be deep in the money again. And honestly, we might be able to take 3 trades off of this one play right here. But I'm not going to over push it. I'm going to wait, because sometimes once it breaks support or resistance, it could make a new support resistance. What happens is, as you see right here, this is considered your support. This is considered resistance. Once it breaks, then this becomes support now, and then you'll have to make a new resistance line above. So we're not going to over push this play. We've already got 2 plays out of it, which is excellent. So we'll just wait it out. But like I said, it could easily be going down some more, because we was above the support line, the resistance line, excuse me. So this looks like it's going to be another easy in the money, deep in the money play, strictly off of, like I said, playing off of support, resistance, price action, and no indicators. Like I said, you see my indicators here, but not using them. That's not what I'm basing these trades off of. Had a quick spike up, nothing to be alarmed about. Okay, so this is a deep in the money win. If this was 4, it should have killed it. So that's 2. And as I said, see, we could have probably took another trade, but I just didn't want to push it. But let's watch it. There it goes. You see? So that would have been your 3rd trade. You could have took off of this one play right here and killed it. Look at that. It's still going down. It's probably going to go down to right about here. But again, don't want to push it. Don't want to be greedy. That's the key to being a good trader is knowing when to trade, when not to, when to get in, when to get out. You don't want to overplay your hand. And as you see, this would have been a nail biter, up and down, up and down. It's like, look what it's doing. Now it's green. So why even chance it? You know, see, it's a nail biter trade. It's up and down. It's up and down. So if this goes above again, we'll probably take another play off of it. It depends. We're going to see what this is going to do, what price is going to do. If it starts to go up, drop significantly, if it starts to go up, then we're going to have to make new support and resistance lines. And if it starts to go back down like we're supposed to, like it did here, then we'll just follow that trend again. We'll follow that movement again. So we'll just wait till we get 2 confirmations. I like to usually wait till I see a blue candle at least, and then sometimes even 2. And on the second one, I'll go in, like right here. That would give me a stronger confirmation. Yes, the strike rate wouldn't have been as good as you notice. You would have gotten right here. You'd had a much better strike rate, but getting in right here is a better confirmation because at least you know it's not a fake out. You know, you don't want situations like this where it looks like it's going down and all of a sudden it goes up like it did here. That would be a fake out. Okay, so now we're just watching it. And you want to draw these lines on your 5 minutes and your 15-minute charts. Just like that. And you want to get more accurate, you can do on the 15. Start off from the top of the wick, or you can even go from the candle. Depends on, you know, how you want to do it. It's no wrong way. The only thing that to make it a confirmation is it needs to touch at least 2 times. So it needs to have touched support or resistance 2 times, as you see here. It touched once, it went down there, touched twice right there, and it touched the 3rd time right there. So now we can make this, put it on the 5 minutes, see, and then you can put it on the 1 minute and take your trades. So this looks like, remember, I told you that now this becomes, remember, this was your support, this was your resistance. And every time it hit, it bounced down. Now you see it broke resistance, and now it made the old resistance now support. So now you notice that now when it's touching off of here, it's bouncing off. It won't cross this line no more. You see, it did right here for a split second. See the wick, and then it came right up. Same thing right here. It's going up. So now what that tells us is that it's a strong possibility that this right here is now became support. So we'll look to see what this blue candle do. If the blue candle touches it and it starts to go up, then this is definitely support now. So this is basically a quick explanation. So look, we can watch what this does. This is a quick explanation on how to set your charts up and to draw out your price action, support, and resistance lines on a trending market. I know I taught you guys how to do it when the market is steady and it's not trending and it's more, flat, like going straight across heartbeat. Well, this is in a trending market. You draw your support and resistance lines with this. You come up to drawings, you make a trend line, you select trend line. And like I said, you start either from the top of the wick, from the tip, or you can start from the candle. And then you want to just do it on a 5-minute chart like this. Or you can do it on a 15-minute chart like so. Go back to the 1 minute. Set up. Remember I told you, see, there it goes. Set up for the USD JPY, set up for the call for 2 minutes, and then take it. Then just wait for the candles to touch, and then once it touch support resistance, which right here would be your support line, the new support line, then you would take it. Now these trades right here are risky. I would stay away from them because you notice they're not large candles. There's a lot of hammers, which are these, and dojis, which are these, and you don't want to get caught up. Like I said, you want something that's strong, like these candles, nice big strong candles. These are iffy, and we haven't even seen what the new resistance line is going to be yet. And if it's right here, that's too close. That's too close for comfort. See that? So if it's going to be coming just up here and bouncing back, that's way too close for comfort. That's a risky trade. We don't want to be in a trade like that. Same thing right here. See, price, small candles. We don't want to even mess with. We don't even want to mess with that. So we'll end it there. Quick. You're seeing me take 2 quick trades easily in the money. Strictly off of price action, no indicators, and in a trending market. Here goes touching. No, that was the old trade, sorry. So that's it. So I'm gonna leave you with that. This is Caujuan Mayo, co-owner of BTS, Binary Trade Signal. Thanks again. See you on the next one.